Okay, let's get right into it. If you're over 65, you need to hear this. The IRS tax deadline is literally just 48 hours away, and we've got to talk about two massive mistakes a lot of folks are making right now. You'll definitely want to stick around to make sure you're not one of them.
So, yeah, this really is an urgent heads up, especially for seniors. With that clock ticking down, millions of people are about to make a simple, costly mistake on their tax bill. We're talking about real money being left on the table.
Wow, just listen to this. Millions of seniors are panic filing and making a devastating mistake that is causing them to overpay the IRS by hundreds, if not thousands of dollars. That really says it all, doesn't it? In this last-minute scramble, people are literally giving away their hard-earned money. And we're not talking about a few bucks here. This is a serious, serious mistake.
All right, so this is your final 48-hour warning. Let's expose two major tax traps you need to dodge before Wednesday's deadline.
So, what's trap number one? It's something so simple you'd think it couldn't be a big deal. But it is. It's all about using the wrong tax form. You see, a lot of tax preparers, and even the big software programs, they just default to one form out of habit, and that can cost you big time.
But don't worry, there's a way to protect yourself. Think of it as your own personal shield. Form 1040SR. This is the form designed specifically for you, and it unlocks a higher deduction that is your legal right to take. Let's break down how it works.
Okay, take a look at this. On the one hand, you've got the standard Form 1040. This is the one-size-fits-all form that, a lot of preparers just grab by default. And for seniors, that's a huge mistake. But on the other hand, you have the Form 1040SR. That's the one you should be asking for.
So, you might be asking, well, can I use this form? It's incredibly simple. Were you born before January 2nd, 1960? If the answer is yes, then you have every right to use this form. It's that easy. And using it is what unlocks that bigger, better standard deduction.
And here's where the rubber meets the road. Look at these numbers. If you're a single filer over 65, you get an extra $1,850 tacked onto your deduction. If you're married and both of you are over 65, that jumps to a whopping $3,000. That's $3,000 you don't have to pay taxes on. It's a huge deal.
And you know what that extra deduction can do? This is the kicker. It can actually lower your income enough to fall below the line where your Social Security benefits get taxed. Think about that. Just by checking a different box, you could potentially make all of your Social Security benefits completely tax-free.
Okay, let's switch gears to the second big trap. And folks, this is a dangerous one because it's based on a really common myth about filing for a tax extension.
I want you to read this carefully. Many seniors think that filing an extension gives them until October to pay their tax bill. That is 100% false. Let me just say that again. It is completely 100% false. This belief is a trap that catches so many people every single year, and it's expensive.
Here's the deal. Think of it like this. An extension is just getting more time to turn in your homework. It doesn't mean you don't have to pay for the class. It's an extension to file, not an extension to pay. That bill, it's still due this Wednesday, April 15th, period.
And if you don't pay up by that deadline, well, that's when the IRS hits you with something called the failure to pay penalty. It's exactly what it sounds like. From the very next day, the clock starts ticking, and they start adding interest and penalties to whatever you owe.
But listen, and this is maybe the most important thing I'm going to say today. Not paying on time is bad, yes, but the absolute, hands-down, worst thing you can possibly do is stick your head in the sand and not file anything at all, because that's when the real trouble starts.
This is the big one, the failure to file penalty. The IRS sees this as a much bigger sin. They will hit you with this severe penalty if you don't send in your return or an extension by Wednesday. It doesn't matter if you can't pay, they just want the paperwork. They want to know you're not hiding from them.
And just how bad is it? Look at this number, 5%. That's the penalty per month on whatever you owe. Let that sink in. 5% a month. That can literally double your tax bill in less than 2 years. It spirals out of control so fast it will make your head spin.
Okay, enough of the bad news. We've talked about the traps, now let's talk about how to get out of them. Here is your action plan. What you need to do right now, today.
It's a simple 3-step fix you can do before Wednesday. Step 1, demand Form 1040SR. Don't ask, tell your tax guy or find it in your software. Lower that bill. Step 2, file. Get that return or an extension in before the deadline.
You have to do this to avoid that monster penalty. And step 3, pay what you can. Even a partial payment helps.
I'm going to say this one more time because it is that important. Even if you don't have a penny to send them, you must, absolutely must file your paperwork or an extension. This is the #1 thing you can do to protect yourself from a financial nightmare.
So let's wrap this up with the key takeaways. Number 1, use Form 1040-SR to lower your bill. Number 2, an extension gives you more time to file, not to pay. Number 3, the penalty for not filing is way, way worse than the penalty for not paying. So the bottom line, file something, anything, and pay what you can.
And that really leaves us with just one final question for you to think about. With everything we've just covered, is your fixed income truly protected this tax season? You now know the steps to take. What you do in the next 48 hours could make all the difference. Don't wait. Get it done.